Okay, so I'll start over. My name is Felicitas Cortez. I'm from the WBDC, and here with me today is our Managing Director for Entrepreneurial Services, Maura Mitchell. And then we also have Paula here from the Berwyn Development Corp. Hello again. And of course, all our friends from Berwyn Shop. So today we are going to talk about cash flow. And if I may, I'd like to introduce our subject matter expert today, Leonardo Becerra. So Leonardo is a certified public accountant and owner of BM Accounting and Tax Incorporated. This business in 2022 was elected by expertise.com as the best bookkeeper in Chicago. So we are in great hands today. Leonardo's expertise includes monthly bookkeeping, tax preparation, and QuickBooks Online, offering small business owners a one-stop shop for financial assistance. He is here today to share his knowledge to help us navigate the cash flow statement. So please, let's all give a warm welcome to Leonardo. Leonardo, you have,
Can you hear me now? There we go.
yes,
There we go.
perfect. Good
Good
morning.
morning. Good morning.
You do have, I'm going to make you a co-host here, so you'll have the ability to share your
Yeah,
screen.
so I can share. Great, great.
Mhm.
Well, thank you again, Felicitas, for the introduction. Good morning, everybody. Thank you for having me. I always like to kind of do these trainings and provide, some insight on some of the accounting, bookkeeping aspects of your small business. That sometimes is a little bit difficult to understand. It's a little intimidating. So hopefully with some of my trainings, I can at least give you a good overview of what to look for and at least give you an intro into, important aspects of your business. So let me share my screen here. Share screen. Okay. Cool. Okay, I think everybody can see my screen?
Perfect.
Okay, great. So let me just go to present. Where is it? There we go. Okay. So today we're going to talk about the cash flow statement. Here's a little bit, again, just to reiterate, my name is Leonardo Becerra. I am a certified public accountant in the state of Illinois. I'm also a certified QuickBooks Advanced Pro Advisor. So my firm, my company, I just deal with QuickBooks Online. That's the only provider of bookkeeping that I use. It's, for me, I'm sure a lot of you heard about QuickBooks Online. It's pretty much number one in the United States. It's has the best features, kind of like the best, the best of everything. And if you're not on QuickBooks Online, I highly recommend it. And then also, like I was mentioning, I am the sole employee. So it's just me. I don't have employees. I don't outsource my work. I do everything in-house. So it's very convenient. A lot of clients like that they just deal with me. It's not like I bring you on board and then I hand you to somebody else. You deal with me all the time. I'm the only employee. I am kind of the one-stop shop. I do your bookkeeping via QuickBooks Online, financial statements, and then from there we go to the tax preparation. So it's not like you have to deal with somebody for your bookkeeping and then deal with somebody else for your tax accounting. It's all just kind of done in one place, which is very convenient. To get a hold of me, the best way is right there, my email address. You can also go to my website. I have my email address on there also. Uh, Definitely email is the best way. Phone is really hard to get a hold of me. So if you wanted to, talk further, feel free to send me an email. I'm usually pretty good with my email. Okay, so cash flow. I know you hear the statement, cash is king, and that is very true. The goal for your business, when you're running your business is this term called positive cash flow, which at the end of the day, what that basically means is you have more money coming in than is going out. And with that said, negative cash flows when you have more money going out than what is coming in. So as a business owner, it's not like, okay, every single month you need to have positive cash flow. Sometimes that's just not possible. There's one month where, hey, this is my slow season. So I might have some negative months, or or this is my good season. I have positive cash flow every month. It's okay if it fluctuates. Sometimes clients get a little worried. They have a couple months where they're negative. It happens. Some people have a slow month, a slow couple months. But the main thing is when you look at your cash flow, you want to look at it over a wide range of months. And then from there, if you look at it for the full year and okay, for 2023, I'm negative cash flow, then that's, we need to look at that. You need to investigate why it was negative. Because the more you're negative, then the more likely your cash is going to run out. And then now you're going to have to go look for a loan. And the problem is sometimes is when you get to like zero cash flow, like when you're just barely making it, sometimes it's even harder from there to get a loan because they're going to look, a company's going to look at that and be like, wow, you've been what's called burning cash. Like you're just going through your cash really quick. And then even might make it, more difficult for you to, get a loan from there. So very important to identify the earliest possible when you kind of see a bad trend and be like, okay, I'm negative for 6, 8 months in a row. You need to dig down and see why this is happening. And now, when things happen like that, then the next question again is like, hey, Leo, well, my cash flow is not good. How do I improve things? And a lot of times I see clients and they try to like complicate things. Like they really try to like, oh, let me look at this number, or let me pay attention to this very little detail, or maybe this is the main reason why my company is losing money or burning through cash. But I tell clients, let's keep it simple at the end of the day. These are the two main ways to improve your cash flow. And like I said here, keep things simple. Number one, increase your sales, bring more money in. However that may be, you need to advertise more, you need to look at other products or another service that you can provide. At the end of the day, if we bring more money in, that's going to help your cash flow. Number two is reduce expenses, which is an obvious one too. We're keeping it simple here. Reduce your expenses. Let me see where I can save money. Let me reduce my rent. Let me buy products that maybe are a little bit more cheaper. Or let me look at some of my admin costs. Maybe my insurance, I can get a better quote on my insurance. I can maybe travel less or, really dig down and be like, where can I cut back on expenses? So if I cut back on expenses, I have more money in my bank account at the end of the year. So these are the two ways to kind of improve things if you're noticing that your company is having negative cash flow. And, a lot of the times, like for me, when I advise clients, I say, hey, increase your sales. And, to increase your sales, to do that, I would try to hire somebody or having a consultant that's really an expert in your business. So, like if I'm selling e-commerce, and I want to increase my sales, I'm going to hire somebody who's really good with e-commerce. They know how to advertise. They know where to sell things. When you're struggling with your sales, try to find somebody who's a subject matter expert in your industry, because that'll be a great way to kind of bounce ideas off somebody to kind of improve your sales. And that's like something that in my position, all I can do in my position as kind of like an accountant bookkeeper role is just let you know, hey, your sales are down, your expenses are down. But I might not have that expertise to be like, yeah, I don't do e-commerce, so I don't know how to say, yeah, you need to increase your sales. I don't know how to. But that's where you would hire somebody who is good in your industry to kind of help you improve things. So definitely a lot of times clients say, hey, how can I improve things? Like I said, increase sales, reduce expenses. And then I always recommend try to find somebody who's an expert in your industry, and they can even give you more insights on how to increase your sales and then maybe how to reduce your expenses also at the same time. With that said, I mean, we're kind of halfway through already. I mean, the cash flow is very simple. This is not going to be a long presentation. So maybe like at this halfway point, does anybody have any questions or, something that they want me to elaborate on? Let me see. I don't know if there's anything in the chat.
So you please place any questions in chat, or you can simply unmute yourself if you have a
Yeah.
question for Leonardo.
Yeah, if not, I can, it's pretty simple, but I don't know if anybody has any questions. I'm not seeing anything in the chat. So, I can just move forward to the next slide here. Okay. Okay, so the cash flow statement. So what does a cash flow statement do? You're basically just tracking your cash balances. So the most common one is your checking account. Every business is going to have a business checking account. And you notice how I said business, don't ever in your cash flow statement include any personal accounts. Like, any type of personal account, you don't want to be in this cash flow statement. You just strictly wanted to keep it business. No personal statements here. And when you look at your cash balances, you want to look at all your statements. So, or all your accounts. So you might have a savings account. You might have, 3 bank accounts. You even want to include PayPal accounts because that money that sits in your pay account, it is considered cash that you can use. So when you look at your cash balances that you're going to use for your cash flow statement, you want to use all the bank accounts, all the savings accounts, all the PayPals that you have under your business. Now, the second thing here, forecasting, that's also another powerful tool for you as a business owner. So you can identify and say, and we're gonna go over one after we talk about this, is, my cash balance is $100,000. And I predict that in the next 6 months, I'm going to lose $100,000 by doing this forecast. Then if you're forecasting $100,000 negative cash flow, then you're possibly going to be at a zero cash balance within 6 months. Now, forecasting is a little bit hard because you're always making estimates, you're always making assumptions. Like, you're always going to say, okay, to do a forecast, you're going to estimate, say, hey, my sales are going to stay the same. I'm not going to go up or down, but my payroll is going to go up for this month. I'm going to hire somebody new. What happens if your sales maybe goes up or they go down? So, whenever you do a cash flow forecast, keep in mind that you're just kind of doing your best guess, your best estimate. It doesn't mean because you're forecasting this that it is going to happen, but it's still a good tool to have just to keep in the back of your mind. Let me just kind of forecast and see how my business is going to do cash flow wise. Am I going to go negative? Because sometimes for your business you need to invest in your business, like you need to buy a big piece of equipment or something like that, and that could be a pretty big cash hit. So if you can forecast out and be like, hey, I'm going to have this, I have to need to buy this big piece of equipment, $50,000. Let me put that in my forecast and let me see how that affects my cash balance. And then maybe instead of trying to get a loan when you're at $0 in the bank account, you can maybe try to get a loan when you have 50,000. And then that way that'll look a lot better when you go and you try to apply for loans because you already forecasted and you're seeing, I really need this big piece of equipment. If I need this, I need to get a loan. So that's another good way to forecast. It helps with big purchases that you're going to make in the future, big investments in your business, to kind of let you know if you do need to buy this, what type of cash you would need on hand. And that's where a loan or line of credit would help. Where, hey, let me increase my sales. Let me try something new. And if you can bring more money in via sales, the better. The loan is kind of your last resort. If you can bring it in naturally via sales, hey, that's the best way. But sometimes, it's not possible to do that, which is perfectly fine. And that's when you go and you get a loan. So now I'm going to share my another screen here. Let me kind of back out. I'm going to share a cash flow statement. Here it is. So this is an Excel. Okay, great. Can you see my Excel spreadsheet? Everybody can see it? I'm sharing the right screen.
Yeah, it's not showing up just yet.
Oh, it's not showing up. Okay, hold on. Sorry, I'm a little rough with Zoom. Let me stop sharing. I think I need to share my different screen. Okay. So I'm going to share this screen here. Share screen. Cool. Here we go. Okay, hopefully now you see it.
Yeah, it's up.
Okay, great, great. So this is how a basic cash flow statement looks like. Let me zoom in a little bit here. We're going to focus on this yellow column. So let's just think of September 2021. This is what my cash flow is for the current month that I'm in, or the current month that just ended. So let's pretend we're in October 2021, and I'm just looking at my business, and I want to see how my business did cash flow wise for the month of September 2021. So when you do a cash flow statement, you always start off with the opening balance. The opening balance is what your starting cash balance is. So like I said, this 368,000 would be a combination of all your bank accounts, all your savings, all your PayPals, or it could just be one bank account. You know, it's up to you how many accounts you have. So this is what my cash was when I started September 2021. So once you get your opening cash balance, the next thing is to calculate here, your income, your cash in. What came in my bank account? And here for this company, we separated via markup, sales, miscellaneous revenue, but don't look too much into that. Basically, at the end of the day, my company brought in $787,000 via income, via sales. And this is cash in is, of course, gross sales. This is not your profit. This is just the total money that came in for this month. Once you calculate your total cash in, then you look at your cash out, my expenses. What money went out the door and for what it was for. So in this case, you can see this is a consulting business. So they hire a lot of contractors. So they spent $580,000 on consultants for the month of September. And you can see by far that is their biggest expense. Out of almost $700,000 in expenses, 580 went to consultants. And then, of course, we have all our other expenses like health insurance, payroll, W-2 employees. These are contractors. And then 94,000 is payroll, which are W-2, your rent, your software, your travel, utilities. So at the end of the day, the money that went out for operating expenses was almost $700,000 went out of my bank accounts. But there's also another important line item that you would need to include for your business, and this would be owner's pay. So without getting too complicated, if you're not an S Corp, at the end of the day, you're not going to have a W-2 for yourself. If you are an S Corp, you will. But, I won't complicate with the S Corp because it's a really complicated thing and it's not important for this discussion. But let's just say you're an LLC, you're a sole owner. You also have owner's pay. And when you do your taxes, you're taxed on what the company made, what the profit was, not what you took out in owner's pay. So if your company made $100,000 in profit, but then you tell the IRS, I only took $50,000 that year, doesn't matter. They're going to tax you on $100,000. That's what the company made. They're not going to tax you on what your owner's pay is. But for purposes of cash flow, we still need to track your owner's pay because that's money that came out of your bank account. Even though it's not an expense to your company on your tax return up here, it's still, we need it because we need to know everything that came out of your bank account, whether it's owner's pay or operating expenses. So in this scenario for September, I took out $50,000 to pay myself. And I need to include that because that's money that came out. So at the end of the day, I had 787,000 come in, 699 went out for operating expenses, and then another 50,000 came out to pay myself. So at the end of the day, because this number is positive, that means I have positive cash flow. I actually brought in at the end of the day $37,000 in cash for the month of September. So then the simple calculation that you do here is you take your opening balance. So I started out with 368,000. I brought in $37,000. Now I have $406,000 in my bank accounts. Now,
Leonardo, do you recommend that these founders pay themselves always?
Paying yourself, that's a very, if you're not an S Corp, so this is if you're not an S Corp, if you want to pay yourself, it's very up to you. You can literally, because I have clients that have multiple businesses. For some businesses, they never pay themselves. They just kind of leave it in the company and reinvest it. So like, for example, for them, they never pay themselves. But, for you, as far as how much you want to pay yourself, is completely up to you. One thing you have to keep in mind is, like I said, don't think it's, I'm taxed on what I paid myself. Like I said, you're taxed on what the company made. So keep in mind is, and this is another way to use your cash flow statement to see, okay, what can my company afford to pay me? How much, if I have 406 in the bank account, obviously I can't pay myself 500,000. That would put me negative 100,000. So in this case, I paid myself 50,000. Obviously my company can afford that. I'm still have 406,000 left in the bank account. But as you can see, like, let's just say I want to pay myself 300,000, it's a pretty big hit. Now I'm negative for the month. Now I'm only have 156,000 in the bank account. So it's up to you as a business owner to run this cash flow statement and see, hey, what what can I afford to pay myself? Some, like I said, so for some businesses they have a slow season, so maybe I don't pay myself too much. I only pay myself a little bit. Or like, for example, for my business, tax season is great. A lot of money is coming in. I can afford to pay myself more. But when tax season is over, it's not that much money is coming in. So that's why I need to budget and be like, okay, I can take out this much during tax season. During non-tax season, I'll drop it down a lot, maybe, a lot less than what I was making. So it's up to you as a business owner. The IRS doesn't have any rules as far as like how much you need to pay yourself if you're not an S corp. So, it's completely up to you to see what the business can afford and how much, you'd want to pay yourself. Because also, it's not a question of how much you want to pay yourself to. It's also a question of like, do I want to pay myself, or do I rather keep the money in the business because I need to buy a piece of equipment, or I want to reinvest in my business because I want to open something else or do something else with my business. So there's a lot of factors in there. So, with that question said, I would say there's no like concrete right or wrong answer. It's very dependent on your situation, how the company is doing, whether you want to pay yourself or not. If you want to pay yourself for the full year, you don't have to, completely fine. If you want to pay yourself every month, completely fine. So does that answer your question or?
Yes,
Okay.
thank you.
Okay, great. Um, and then, okay, so with that said, in this example, so like I said, we had $37,000 in positive cash flow. So I'm left with 400. So my bank balance went up. My cash went up for this September month. It's now 406,000. So now when I look at these next months here, this is where the forecasting comes into place. I don't know. Right now it's October. It's not even the end of October. Right now I'm in the beginning of October. So October is not even done yet. I don't know how December is going to look like. I don't know how January is going to look like. So let me forecast here. So like for this company, they're saying my income's going to go up. Last month it was 787,000. It's going to go up to 841. It's going to go up 843, 847, 849. And like I said, what you decide your forecasting is up to you. You can say, I think my business is going to go up 10% next month, or it's going to go down 10%. These are all estimations. These are not, factual numbers. You need to forecast and decide for yourself how the business is going to do. And like I said, with forecasting, it's just you're guessing, you're estimating. These numbers are, I'm saying it could be 841, it might be 500,000. But it's still good to at least give your best shot, give your best estimate, just so you can kind of forecast, for at least maybe the next 6 months. Like, for example, this one goes from September 2021 all the way to August 21. So we're forecasting 1 year out down the road. So all the numbers you see here that are not yellow, these are just estimates that we're doing. You can see for some of the expenses, we're just saying office supplies is going to stay the same, 1,100. Our payroll is going to stay the same. Our contractors is going to go up a little bit, then it kind of stays the same. But you can play with these numbers and you can kind of see what your forecast is going to be. So when my last month, September 30th, 406,000, what happens is when you do, so when I'm going to do October, so let's just say we're in November. Now I want to look at October. October is done. So now I know what my actual numbers are for October. You take your 406,000, which is down here, and you bring it up here. Now this is my opening balance. So now I have last month I have 368,000. Now in October, I start with 406,000 because I brought in $37,000 in the month of September. So then your ending balance, your closing balance from September is now your beginning balance in October. And then so if you had 406,000 in your bank account in October, and if you look at what happened in the month of October, we're saying we have $81,000 of positive cash flow. I didn't pay myself anything, it's blank. Now my cash is 488,000, so now it went up even further. And you can see for this company, the way they were forecasting, they're theoretically saying, October 21, I have 406,000. If I go all the way to August 2022, they are forecasting to have 1.3 million in their bank account, from 406 to 1.3 million. So for this company, when I see this, they're forecasting a good year. They're forecasting an increase in sales, and you can see expenses are pretty constant. They're not expecting a huge increase in expenses, but they are forecasting an increase in sales, which is helping this 1.3 million. And one other thing I like to point out is you can see every month here, it's positive. So they're forecasting, they're saying every month we're going to be positive. We're never going to turn negative. And when you have a lot of positive, net positive cash flow months, it starts to add up. And as you can see, we start with 406. Now we're at 1.3 in 1 year because we're still positive 90, positive 92, 94, 96. Now we're at 1.3 million. Well, let's just say I want to play with the numbers. Let's just say my contractor expenses was 1.5 million. Let's just say, or sorry, I missed the 0, 1.5. When I put that number in, you can see how my cash flow drops to $487,000. So because of this increase in contractor expense, of course, this is not really going to happen, but I just want to play with the numbers just to kind of show you. In March 2022, I need to hire a bunch of contractors. Okay, now my cash flow is $487. And you can see in the month of March, because I took this big $1.5 million hit, now I'm negative $680,000 negative cash flow for this month. And you can see with that said, I only had $5,000 left in the bank account for that month. So this would be a good way for you. I'm just kind of giving you an example of what you would do if like you were going to buy a big piece of equipment, or if you're like, for the month of March, my sales are going to be super low because of this, so I need to put that in. So this will help you see like, okay, in the month of March, I'm only going to have 5,000 left in my bank account. Should I get a loan? Should I, maybe try to increase sales? Should I maybe not buy this investment, buy this piece of equipment? It's maybe, I maybe don't have enough in my bank account. Maybe I buy it in June once I have more money in my bank account. So, with a cash flow statement like this, and by forecasting, you're better able to see like what your business can afford. And I like to point out, like I said, this is if my forecasting is 100% correct, which is, of course, it's not. You're not going to be able to predict the future. But hopefully your forecasting is at least within a reasonable range. But also have that in the back of your mind that don't rely on your forecasting to be 100% correct, because you could be wrong and it could throw off all these numbers. But I like to tell my clients that still doing this is better than not doing anything. Like, I'd rather do this than do nothing. You at least have some kind of sense of what you might be able to afford via looking at your cash. So with that said, this is pretty much what the cash flow statement would look like in a cash flow forecast. I really have nothing else. My next spreadsheet is just kind of like, thank you, any questions? So I guess at this time, does anybody have any question? I kind of went over a lot here, but does anybody have any questions on this cash flow statement?
I'm just wondering what people do now. What do you founders do now to track your cash? Does anyone use an Excel spreadsheet?
I'm using QuickBooks right now, and sometimes I do a very, very minimal version of that spreadsheet.
Okay, yeah,
Great.
QuickBooks, Excel. Yeah, you can use an Excel. Yeah, you have an accountant. I like to point out too, like this cash flow statement, you can easily run it in QuickBooks and just when you run your profit and loss, just make sure you run it in cash, which is pretty much with all of you're never gonna run accrual because you're all cash basis taxpayers. So when you run it in cash, you're pretty much gonna get a cash flow statement. The only thing I like to point out is make sure, because owner's pay is not on your profit and loss, make sure you include owner's pay for cash flow statement purposes. And also I forgot to add, if you have a loan, if you take out a loan for that month, for example, you do want to include the loan and say like loan here. And then you'd put in how much money you got in for the loan because that's money coming in. Even though it's not income, you still want it in your cash flow because that's the money that came in. So, for a loan too. So you can easily run it from your QuickBooks, just realize, export it to Excel and then kind of add these rows that for owner's pay or for any type of loan you may have. So you can definitely do it from QuickBooks. Very, very easy to do. Just export in Excel and you can go from there. Okay, I have a question here. I'm in QuickBooks app whenever I remember. I added all income and expense. Do you have a good trick to remember this? In QuickBooks, when you need to add all your income and expenses, usually you want to do that from the banking screen. It's very easy in QuickBooks. It kind of downloads all your income transactions, all your expense transactions, and you need to go in QuickBooks and tell QuickBooks what, I bought $100 from Amazon. You just tell QuickBooks, hey, this is office supplies, or Facebook ads, this is advertising. And then your income that comes in, if, for example, for me, like if I have money coming in, I tell QuickBooks this was for tax, this was for bookkeeping. So then you can see up here under your income, if you scroll up, you can see, hey, I brought in 100,000 for taxes. I brought in 100,000 for bookkeeping and things like that. So definitely, get in your QuickBooks at least once a week so you can update the transactions. Because if you don't update your QuickBooks at least on a weekly basis, what happens is you leave it for a month, 2 months, 3 months, and then now instead of just looking at a couple of transactions to categorize, now you have hundreds of transactions. And then like I understand you get unmotivated and then it just sits there. So definitely just send a reminder on your phone or a calendar just to log into QuickBooks and update your books. And then that way you could run these cash flows every month so you can get an idea of how the business did cash flow wise.
Any other questions for Leonardo?
Yep.
So could people go to their accountant and get help creating a cash flow statement? Or how do you recommend people get help to do this? I mean, we can help at the Women's Business Development Center with the basic, but yeah.
So what I recommend is, first, if you're, like with all business owners, I highly recommend to get on some sort of bookkeeping software. It might not be QuickBooks, which is perfectly fine. I just work with QuickBooks, doesn't mean this, I hear there's another one called FreshBooks, which is pretty good. Whatever you do for your business, definitely get on a bookkeeping software. Because if you're on some type of bookkeeping software, like this information that I just grabbed from this Excel spreadsheet, it should be pretty easy to produce from any type of bookkeeping software that you use. Now, if you're doing this manual via Excel, it could take you a little bit longer. There's some more work up front. But if you have some type of bookkeeping software, producing a cash flow statement like this, you can probably produce it a little bit more rapidly, probably more accurately too. The bookkeeping helps you kind of accurately track everything. Or, of course, if you have an accountant doing this or doing your books, they should easily be able to kind of give you a cash flow statement, based on, them doing your books. But, I would start first with the bookkeeping software. And then if you're like, hey, my accountant just does them, you can just simply ask them and they should be able to produce something for you.
There is a question in chat, Leonardo.
Oh, there is?
about
Okay, let me see.
keeping every single receipt or invoice. What is your recommendation?
Okay. Oh, as far as receipts, you know, I don't recommend keeping receipts for everything. Like if I go, like if I, you know, park somewhere for $20, I'm not going to keep the receipt for that. Or if I need a, you know, I'm going to buy something very small somewhere. I'm trying to think what's going to be small. Like for example, like if I have, like for example, my QuickBooks Online. If you buy QuickBooks Online, you need to keep a receipt for that. I mean, obviously it's obvious. They see it on your credit card, bank statement. You bought something from QuickBooks. It's for your business. You can't really use QuickBooks for personal reasons. Where I do recommend keeping receipts for is like your bigger purchases. So like if you're a vendor, you buy something from a vendor and it's a majority of your expense, always keep receipts for that. Because when the IRS audits you, they're going to look at all your expenses and be like, hey, you know, they spend 50% of their money goes to this expense. We're going to audit that because that's a lot of their expense. So always keep receipts for your bigger charges. I would say anything like above 500 is a good threshold to keep receipts for. Another one I would try to keep receipts for is like, for example, if you buy anything at like a store where it could be personal, like for example, Costco, Best Buy, um, you definitely want to keep receipts for that. Like for example, if I buy a laptop at Best Buy, I'm definitely going to keep a receipt because I don't want the IRS to go in there and be like, what did you buy at Best Buy? How can you prove you didn't buy a TV or a video game console? So, you know, it says Best Buy on my credit card, but you know, that's not good enough. They want to know exactly what you bought. So in those situations where you're going to a store where you can buy personal items, you always want to keep the receipt for those, just to prove to the IRS that it was business and not personal. Oh, you're welcome. So any more chat questions or if anybody wants to unmute themselves? I think I think we don't have any more questions. So, you know, I appreciate everybody's time. Hopefully this was helpful. You know, I try to keep it simple. I don't want to keep it, you know, too much deep. There's other things you can do, but I think this is kind of a good baseline for somebody who doesn't have any accounting background to kind of get started with their cash flow and with their forecasts and kind of identify ways to, you know, like I said, keep things simple, bring in more money, spend less. You know, that's what I like to tell my clients. So,
Good
so yeah.
tips. If they wanted to follow up with any questions, Leonardo, what's the best way to get a hold?
Yeah, so the best way is my email address. I can just type it in the chat. Definitely that's the best way to get a hold of me. Phone is very hard just because I'm in meetings like right now, or you know, I'm out of the office. So I just put my email address in the chat. Feel free to email me and we can talk even further.
Okay, very good. Well, we are going to give everyone just a little bit of time back today. And if you have any questions or, you know, if you need more information from Leonardo about your cash flow statement or any other troubles that you may be encountering, please get a hold of him. His email is in chat, and we're going to make sure to share his information again and the recording of this webinar by the end of day. Okay. All right.
Yep.
Well, thank you, Leonardo, for spending a little bit of time with us today and making something scary not so scary. So thank you for that.
No, you're welcome. Thank you for having me.
Okay,
Thank you, everyone.
Thank you.
okay, thank
All right.
you, and we'll see you again soon for our next Berwyn Shops webinar. Have a good day.
All right, take care. Bye-bye.
Bye-bye.